morning everybody, it's some syndication with my analysis this morning for Monday the 15th of October 2018. On here I have the euro against US dollar, and I'm looking at this pair, part of my four majors analysis this morning. So first up, euro against US dollar on the monthly time frame. I've applied the Forex Made Ezee template, and let's have a look closer to this. So straight away, the thing that concerns me on this particular pair on the monthly is we've had now 1, 2, 3, 4. We're going to our fifth consecutive month where we have a lot of indecision. Look at the candlesticks, guys. There's volume. Okay, so there's clearly a high and a low point, and we have an excess of 300 in some cases, 200. There's probably going to be 400 odd. However, there is no follow through, momentum. There's small candles, a lot of wicks. So I know straight away that what's been happening over the last 4 or 5 months is there's been a lot of speculation. And not great at all. Okay, not great for trading at all. So if you are trading this particular pair on a day-to-day or intraday time frame, geez, you have got some serious cojones. Okay, because yeah, there's no general direction at the moment now. All we've done is, or all we've seen, particularly through this year, from this point to this point over here, represents 2008, is we've seen a resistance level here at 200. Price went sideways for a while, and then a breakout, and then prices dropped to the 50 period moving average, which was the resistance and support mechanism through the latter part of 2017. Since then, we've seen nothing. A lot of apprehension, a lot of no-go. It's still being supported by the 50 period moving average, if that is a positive sign. Okay, and as long as she stays above that level, then the likelihood is we could see a correction high. Having said that, we need to see that candlestick present itself. We need to see a statement candle. Notice particular point of view has been resistance in the past and was a support through there. So we are still trading above the 50, which is a support. We're still trading above the long-term support and resistance level, which is another positive. Having said that, yeah, MACD, fast line below the slow line, negative sign, histogram below the midline, negative sign. Okay, that's telling me momentum's not clearly there. RSI was sideways for a long period of time, the last 3 months, and then has dropped below. So that's another negativity. So there are signs of negativity here, and there has been obviously selling throughout the first and second quarter of this year. Having said that, we've not seen any continuations of that selling sentiment because price has gone into some sort of apprehensive consolidation range. So we still need to look for that statement candle. I mentioned it last month, and I mentioned the month before that, and I mentioned the month before that. We don't have any viable reason why we should be trading the euro against US dollar currently, because it's not doing a damn thing. So therefore, why trade it? So there again, another one, look for this month to see a continuation candle. It's got to be either a statement candle, i.e. a support bounce correction to the upside. Then we could look potentially back up towards the January and February levels as a viable target level. That could be our TP level 1 on the correction in that direction, or a break low, which would then bring in the 2015, 2016, and 2017 low point as a viable continued selling momentum target 1 to the downside. Either way, I need to see a close higher or lower than this consolidation. Trading within the consolidation is just crazy, stupidity. I can't think of a better word of saying it. But yeah, it's just nuts. There are far better things out there to trade than this particular pair. So yeah, just take that on board. Okay, I'll drop down to the weekly just to show you how crazy apprehensive this is. Yeah, not great. And there again, if we're looking to sell, we need to be below the 200, which is currently still above the 200. If we're looking to buy, it needs to be above the 50, and you can see it's in between it. So price stuck between two moving averages clearly shows no trend. Trend's going to be supported by moving averages. Both 50 and institution needs to be supporting price in an upside trend. Not the case. Price needs to be trading below the moving averages, i.e. the 50 and the 200 to be continued selling. In this case, no, because it's trading in between. So there again, another sign that we should be apprehensive. We should be standoffish. We should rather just sit on the side of the fence, let all the dumb money play it out, gets kicked around a bit. Yeah, clearly they like it because it's been happening for 5 months. Rather wait for either close higher than the 50 period moving average on the weekly in my eyes, or close lower than the 200 on the weekly in my eyes, and then we can see a high point over here as a first target, or a low point down here as my first target. In between, not interested.